Welcome to today's deep dive video where we're answering the biggest question in crypto right now. Can Bitcoin reach $150,000 by 2026? But this isn't just another prediction video. In the next 30 minutes, we're breaking down the halving cycle, institutional investors and Bitcoin ETFs, supply-demand pressure, whale accumulation, U.S. economy and liquidity cycles, global regulations, 2025 to 2026 bull cycle. Risks, scenarios, and realistic targets. If you're serious about crypto, this video will give you a complete roadmap. So stay tuned till the end. One of the strongest forces driving Bitcoin's price is the halving cycle. Every 4 years, the reward miners receive for creating new Bitcoin gets cut in half. 2012 halving gives BTC went from $12 to $1,000. 2016 halving gives BTC went from $650 to $20,000. 2020 halving gives BTC went from $8,500 to $69,000. 2024 halving gives long-term impact coming in 2025, 2026. Halving works like a countdown timer for the next big bull run. Historically, Bitcoin hits its peak 12 to 18 months after the halving. That puts 2025 and 2026 right in the sweet spot. After the 2024 halving, daily Bitcoin production dropped from 900 BTC gives 450 BTC per day. When new supply drops but demand stays the same or increases, prices go up. It's basic economics. This cycle's supply shock is expected to fully hit the market in mid-2025 to early 2026. 2024 changed everything. For the first time ever, big global institutions got direct access to Bitcoin through ETFs. BlackRock, Fidelity, Ark, VanEck. These giants are buying tens of millions of dollars worth of Bitcoin every single week. Retail selling doesn't matter anymore, institutions absorb the dips. That's why analysts call this the institutional cycle. As Bitcoin becomes more stable and regulated, large financial players start treating it like a serious asset. By 2026, we may see pension funds allocating 1 to 2%, insurance companies adding BTC as a hedge ETF, assets doubling, corporations diversifying into BTC. If this level of demand comes in, $150,000 is not a dream. It's a probability. The stock-to-flow S2F model is one of the most popular Bitcoin prediction tools. Based on scarcity, 2021 target, $100,000 close but missed. 2025 to 2026 target, $150,000, $250 K. This model is not perfect, but historically it captures the overall direction very well. Scarcity is the biggest driver, and Bitcoin has never been more scarce than now. Stock-to-flow S2F model is one of the most popular Bitcoin prediction tools. Based on scarcity, 2021 target, $100,000 close but missed. 2025 to 2026 target, $150,000, $250 K. This model is not perfect, but historically it captures the overall direction very well. Scarcity is the biggest driver, and Bitcoin has never been more scarce than now. On-chain analytics reveals something massive. Whale wallets, 10,000 plus BTC, are increasing. Exchange reserves are the lowest in 5 years. Retail selling gives whales accumulating. When whales buy silently, it creates delayed but powerful pumps later. After halving, miner revenue drops, so miners start holding Bitcoin instead of selling it. This reduces selling pressure dramatically. This phenomenon is called the miner supply squeeze. This usually triggers strong price movement 1 year after the halving, which means 2025 to 2026. A typical crypto cycle works like this. Bitcoin pumps first, altcoins pump next. Profits rotate back into Bitcoin. Bitcoin hits final peak. This rotation cycle historically ends with a massive Bitcoin rally. Most analysts expect this final rotation wave in 2026. Unlike previous cycles, regulation is now becoming clear. The US and Europe are building frameworks that make Bitcoin safer for institutions. Regulation doesn't kill Bitcoin. Regulation legitimizes Bitcoin. This gives institutions confidence, and institutions bring trillions. Markets love election years. Historically, liquidity increases, rate cuts begin, markets turn bullish, risky assets pump. Bitcoin is extremely sensitive to liquidity. Election years usually favor crypto. 2025 to 2026 could be the perfect environment. When interest rates go down, markets enter a risk-on mode. This is great for tech stocks, growth markets, cryptocurrencies, expected 2025 to 26 environment. Lower interest rates, increased liquidity, higher investor confidence, exactly the conditions Bitcoin needs for a mega pump. Here are real. Published 2026 price targets from major institutions. JP Morgan, $115,000. Standard Chartered, $150,000. Bitwise CIO, $200,000. ARK Invest, $200,000, $350 K. The average of these predictions lands right around $150,000. Nothing is guaranteed. Possible risks include harsh U.S. tax rules, major exchange collapse, global recession, ETF outflows, whale sell-offs, political instability. Every bull run has its challenges. But so far, data still favors the upside. Combining having data, ETF demand, institutional inflow, and previous cycles. 2025 mid, $90,000, $120 K. 2026 peak, $140,000, $180,000 based on all models. $150,000 is highly realistic and absolutely achievable. Bitcoin's path to $150,000 is built on solid fundamentals. Supply is shrinking, institutional demand is exploding, ETFs are buying every dip, whales are accumulating. Halving cycle is favoring 2025 to 2026. Global liquidity is improving, based on everything we've covered. Bitcoin reaching $150,000 by 2026 is not hype. It's supported by real data. If you found this video helpful, make sure to like, subscribe, and comment below. Do you think Bitcoin will hit $150,000?